In a week dominated by inflation data, key indicators seem stuck. Welcome to Market Insight. I'm Elena Casas. All eyes in the market this week are on Wednesday's crucial CPI number. Core consumer prices are forecast to have risen 0.4% in April. That's the same as the month before. Consistently high inflation has led investors to give up on hopes for a summer rate cut. Two-thirds of 108 economists surveyed by Reuters now say they expect that cut in September. So, has the fall in inflation hit a wall? Let's ask Satyam Panday, Chief US Economist at S&P Global. Satyam, hi. Why is US inflation proving so stubborn?
Hi there. Thanks for having me. It has been a bit stubborn because growth has been also, surprising to the upside. So it is that the underlying demand has been quite resilient in the face of a higher level of interest rates, and that has also led to a slower pace of disinflation, especially in the last quarter. It seems like, at least for now, labor markets are holding up rather well. Wage growth is keeping pace with inflation, and it seems like it's going to be more delayed in a pace of disinflation, at least for some time.
If inflation is resistant, as you said, to higher interest rates, what does that mean for the Fed and especially for their timetable?
For the Fed, basically, they are, paying very close attention to the trend of disinflation. And if disinflation is indeed slower, they are likely to just move back their easing cycle. I think the markets are predicting maybe September as the first rate cut. We ourselves pushed it back to December in the beginning of May. And that was basically conditional on the inflation path that we have seen so far and what we think will be moving ahead. I think growth right now, especially the resilience of it, has been a key factor in sort of slowing down that disinflation. And the Fed looks at the same data that we all look at, and it's pretty clear that if inflation is not really moving towards your 2.5% or under 2.5%, that's what they've been saying, they will just hold it back. They will pause. They have labor markets still doing well. They don't have any rush to cut. They'll most likely be just, let's pause, see what the next set of data says before we are confident to start cutting. Yeah.
But if that first cut doesn't come until December, won't that weigh on the US consumer? I know recent data has shown resilience, but won't higher rates start to cut into spending power?
We think it will. We are of the view that the higher levels of interest payments as a percent of your disposable income, that should be showing up some restraint in consumer spending behavior. And that in turn is going to slow down the US GDP growth rate as we go through the year. And so in that dynamics, you can sort of imagine the consumer spending will start to show a slowing down. The Fed will take that into consideration more. Inflation from the demand side will also slow down. And all in all, the conditions would probably be set in place for the first rate cut in December in that particular scenario.
Globally, Satyam, if US rates take longer to ease than we expected, what does that mean for emerging markets, especially those that are very sensitive to their exchange rate mechanisms with the dollar?
Well, when it comes to the emerging markets, especially in the Asia Pacific and also the other emerging markets, they are very much also looking at what the Federal Reserve does. They are quite sensitive to their own capital flows. So if the interest rate differentials start to become wider, they would be more sort of attuned to the sensitivity of capital flows, the foreign exchange rate depreciations, and thus I think they would probably want to also hold back in their own easing cycle. Now, again, having said that, they also do have their own domestic inflation mandates to follow. And I think, but all in all, together, we expect right now for the Asia Pacific countries and some of the the other emerging markets to also delay their pace of rate easing.
Satyam Panday, Chief US Economist at S&P Global, thanks so much for joining us. Well, that's your market insight. You can watch more videos on Reuters.com.